What's going on, guys? Hamilton here with the Trading Initiative, and I just wanted to make a quick video summarizing kind of what we are looking at within the Trading Initiative heading into the new week starting February 28th. First off, we can't get into what we're looking at without actually going back and looking at what happened at the end of the week last week, which was absolutely insane. We can see here that we have SPY up on the daily, and we've had these two levels, key levels here that we've been trading between, looking to either go long biased or short biased depending on where we are in between these levels. If we're between these levels, we're kind of in this neutral zone. If we're above those September highs, we want to be long biased. If we're below these lows here, we want to be short biased. And look what happened Thursday. Huge gap down with possibly one of the biggest rallies most of us have ever seen in our lives, followed by another massive rally on Friday. So it's very important to understand that yes, the indexes last week were looking very bearish. We did have short positions into Thursday's open, which opened up very nicely for us. But, you know, the market reversed. Is this the floor? We have no idea. Moving forward, we do want to know where we are on the major indexes. And right now, SPY is back in this no trade zone. So for us in the Trading Initiative, we don't want to be too bearish. We don't want to be too bullish. We want to wait for SPY to confirm the direction in which it wants to move. The one thing I will point out, and if you are a part of TTI, you know this, keep an eye on this 50 RSI. If we do manage to pop up and over it and start to move to the upside with price as well, we will be flipping to the long side, regardless of whether or not we really break this 452, 453 level. This is a very key indicator for us. If we do flip up, we might be able to front run the breakout on this upper level here. So SPY back in the neutral zone. Qs really quick, you know, they've been hit the hardest over the last 2 months. We have been net short for 8 to 10 weeks now when it comes to tech. We've been calling for it. We've been sitting in them. We've been sitting in ARK shorts, Spotify shorts, Twilio shorts, you name it. We probably have been in a short at some point over the last 8 to 10 weeks. Massive rally, right? Thursday and Friday, once again, followed the major index SPY, QQQ, followed it, right? Growth absolutely bounced. We came all the way down on Thursday morning session. A lot of us were up huge in these shorts. Whether or not you closed at the exact bottom or not, that's up to you. I did not, which is okay. We opened up. The options premiums were through the friggin' roof. It was very hard to mess this day up considering we've been positioned for this free fall for legitimately weeks here. Where do we go from here? Well, kind of like SPY, we're caught between these two levels. I really am not looking to go long growth with any sort of real size until we're up and over this September area here, somewhere around 382.5. Right now, we're at 345.77, and I just don't feel comfortable, regardless of whether or not what the volume was saying, to really start opening up big, long positions in the growth space. Once again, like we talked about with SPY, we really want to focus on that 50 RSI. That is a big indicator for us. If we do flip up on the 50, then I might be a little bit more aggressive in opening up longs, you know, in the growth sphere. But as of right now, I'll be okay missing out a little bit of the profits because I don't want to run the risk of getting dumped on. I don't want, you know, to be a part of a bull trap necessarily, and therefore I'm just going to kind of sit on the sidelines and wait this out until we figure out what the indexes between SPY and QQQ really want to say. But let's go to the main focus for today. It's XME. So if you're part of TTI, you will probably hear this in our Sunday night strategy session. If you're not in TTI, you're going to get a little sneak peek of what we go over. XME, if we pull it out on the weekly here, as we know, if you're a TTI trader, commodities have been running through the roof. We have traders trading corn. We have traders trading soybeans. We have traders trading wheat. I mean, I'm not kidding. We have positions in a lot of these things that have popped up, including mining and materials. So here we go. Metals and mining ETF XME, breaking out up and over its 2012 highs, closing highest weekly close since 2012. That's 10 years of being trapped underneath these highs set back in late 2012, okay? So if you have a major ETF and the commodities area is moving, this ETF happens to capture majority of that commodity movement, and you're breaking to 10-year highs, you damn well better be sure you should be paying attention to this. Once again, we look at this 50 RSI. Are we above it or below it? We're above it. That means we are looking to go long in these names. XME in particular could be a possible trade itself, but we can actually do one step better and dive into some of the names within XME. But really quick here, a very large portion of 2021 we consolidated around that 48 pin below it, setting a sort of rectangle consolidation that we did break out on the weekly and confirmed, which is the most important part here. We confirmed this breakout above this consolidation at around $47. So currently at $51.77. This is Sunday afternoon. I'm recording this. We'll see where we open up on Monday session, tomorrow session. Could we have a slight pullback here? Yeah, I absolutely think we could have a pullback. Maybe test the $49, $48 level before we continue on up. But as of right now, if you're a TTI trader, this is a clean breakout. We are looking to go long either XME or within some of those XME names, which brings up the next portion. Let's look at the actual holdings within XME. So if we pull these up and we look year to date, we see a lot of these names are actually energy names, right? Not necessarily energy as in oil like your Chevrons and your Exxons, but energy as in coal, energy as in some of the other stuff that might fall through the filter set that XLE looks to capture. So we have names like BTU, AA, ATI, ARCH, CNX, all of these names looking to capture different spots of the commodities world. Now, we don't need to specifically dive into all of these during this little video that we're posting up right now, but I highly encourage you guys to go and look through the top 10, top 15 names within XME and really dig in and say, hey, are there any trading opportunities that are being set up on the individual company basis? Because XME is setting up from the ETF basis. Does this make sense? We like to layer our trades like this. We look for sector strength and then industry strength and then individual company strength. It allows us to get in the strongest companies and outperform the market. So off the top of my head, if you are subscribed to the newsletter, there are a few names, free trade ideas out there that we posted there on the newsletter, and we're gonna go over two of them in particular. One of them is going to be AMR. AMR is your Alpha Metallurgical Resources, and realistically, this is a coal name. As you can see, TraderView here says it's coal. When's the last time you or your parents owned a coal company? I mean, realistically, the hot fad when Biden was being elected was renewables. But renewables just have not been the place to trade over the last 2 years. As a matter of fact, if you want to pull up TAN or PBW, your clean energy and solar ETFs, they are in the dumpsters. Meanwhile, coal, right here, your AMR name, which is a mid cap here at 1.734 billion, is at an all-time high. There's only one reason why a company that pulls coal out of the goddamn earth is at an all-time high, and that's because coal is going through the roof as well. So XME, AMR is one of the biggest names within XME, setting up here, all-time high on the weekly, and we're going, above 79, above 80. We really want to be long AMR. If we do break back down below that $79, $80 level, we can reassess. We can, look to see if there's still an opportunity there to be long, but we could be looking to close those longs as well. Another key factor here, not only are we above the 50, but we have held above the 50 for a very significant time. So like I said, if you're a TTI trader, this is part of our system. If we're above the 50, we want to be looking to go long. And as you can see, that would have been a very, very strong trade if we were able to capture that at the very beginning, right? Our goal as technical traders is to be able to identify these trends as early as possible and be in a position. Otherwise, who cares if you can identify something? You have to be able to play it. But here we go. This is an opportunity for us above $79, $80, RSI above the 50 within a strong industry, commodities still running. This looks like a great trade for us. So the next one we want to go over, and there's so many here to choose from, we're going to go through ARCH. So if we type in ARCH, we are going to see another coal name. Once again, another coal name up and over its horizontal level. It's an all-time high close on the weekly. You cannot get better than these names. I'm telling you guys, if you buy the things that are beating the market, you're probably going to beat the market. You have an edge there. I'm not going to sit here and convince you. You got to believe me when I tell you things at all-time highs should not be in your shortable category. That's how we consistently hit all-time highs. If you would have shorted Apple every time it hit an all-time high, you would have blown your account out very quickly here. So once again, we have ARCH on the weekly, 116.55, above that 101 level. This is a little bit more extended than the previous name that we just went through, but still a name that could be in the long category here. Holding above the 50 RSI, volume is good, it's increasing. As long as we're above that 100 spot on the dot, you should be looking to go long this. Will there be, or could there be, some short-term volatility, potentially a pullback towards that 101, $100 level? Absolutely. The market loves to punish late buyers. But if you have time on your side, if you're an options trader and you're buying months out, or if you're an equities trader and you understand that these positions sometimes can take a while, specifically if you're a commodities trader or in a commodities position, these things are incredible when they start moving in the right direction, right? These things are very hard to stop. As of right right now. We broke above the 101. We're currently at 11655. We have an ADR of 6%. If you're a TTI trader, you know that's good. It is a mid cap as well at 1.794 billion. Another great opportunity to get long coal. If stuff like this makes sense to you, I highly encourage you to check us out. Link is in the description. If you have any comments, please leave them. I would love to converse with you guys. Let me know what you guys think.